Good morning, everybody. I'm Paul Myliotis from Msquared Capital. Thank you for joining us. I'm here today with my co-founder and good friend Paul Miron. Before we start, I'd like to bring your attention to a disclaimer. Today you'll be hearing general information, shouldn't be construed to advice. I can't believe that I read that disclaimer close to a year ago in person at the last strategy day in Melbourne, Brisbane and Sydney. Gee, how our lives have changed since then. I hope by next year we'll be able to see you and greet you in person and we can have some of our normal life back. Now, COVID has changed our daily lives and the way they've been lived and the way they will continue to be lived. And it also has changed, Paul, the way that investments should be looked at. So we're here to discuss about investments and how they have changed post-COVID. So what do we think, Paul?
Well, let's have a chat. Let me go through the key points in relation to what the biggest changes are. Obviously living through COVID at the moment, but the critical points are, for example, the cash-free rate that we have right now. So having cash nearly at zero rate at the moment, there's a significant paradigm shift in the entire investment space. So from an economic theory, a risk-free rate is by terms risk-free and gives you some type of return, but now a risk-free rate actually loses you money against inflation. So what's the impact of that? So the impact of that is that the normal asset allocation that financial planners and fund managers do has now shifted permanently. So it's not good enough anymore to be able to tick a box on a form to say, let's invest 60% in shares and 40% in bonds. It's just not going to cut the mustard anymore. Also, as a result of that, is a lot of money is being flowed out of traditional asset classes and trying to find a home to get that yield. And what people need to be very careful of is that the characteristics of a lot of asset classes, because of that money flowing through, is pushing the yields down, increasing the risk as well. So we cannot any further assume that just because you're getting a low return, it's actually low risk.
Yeah, so before we were saying, look, if you've got a high yield, that normally means high risk. So what we're saying as well is you've got to be careful on the lower yields now because the yields have been compressed. So you need to understand what alternative investments you are looking at. Now, Msquared Capital is one of those alternative investments. We are a private credit provider, but it should be noted that in that alternative investment space, not everybody's the same. Buyers have to beware. Buyers have to beware.
Absolutely.
Let me just speak briefly about what Msquared do. So Msquared, we're private credit providers, otherwise known as a non-bank lender. So we match borrowers that need money with investors that have money that want a stable return. Importantly, with Msquared Capital, we are secured lenders. All of our investments, bar none, are secured via first mortgages over real estate assets, so either residential, commercial or industrial property in the eastern seaboard of Australia, predominantly Sydney. Who would have thought that well over 10 years ago, we did our first ever private lending transaction with our own personal money, and gee, how things have changed since then.
Absolutely. The reason why we did that first transaction is that we couldn't find anyone in the market to be able to provide a great service to either the borrower or the investor and do it efficiently as well and transparently. And so that's where Msquared was really born from. Once our family and friends saw what we were doing, they wanted to be a part of it. And I can tell you this, there is no greater responsibility and humbling experience as well is investing other people's money. And that is why we believe that we should be providing, and has to be part of our ethos, is create the platform and tools for the individual investor to have control and destiny over how they'll invest their money in mortgages.
Well, that's exactly right. It shouldn't be a one-size-fits-all model, right? We've scaled the Msquared business so that investors you take our experience. Well, they know we know property. That's the beginning. We know property. We love property. But they also should know and hopefully know that we care.
Absolutely.
And we're able to scale the Msquared business to what it is today on that ethos. There's not one size fits all. No. It's not good enough to have the same investment strategy for everyone. It's all different.
And there's different investors with different requirements, and we have different mortgages with different risk profiles and different terms. That's really important to match them up correctly.
That's right. We like talking about jargon, Paul,
Yeah.
but let's go back to the basics of how a direct investment works and how Msquared works as a business.
Absolutely. Let's just go through a really simple example. So
Yep.
a borrower has a need. Let's call it buy a commercial building. They will come to us, and our process is we assess the security, we assess the proposal, we assess also the financial capacity and the financial position of that particular borrower. Once we are satisfied that it meets our requirement and our investors' requirement, we then proceed in actually instructing lawyers to register a first mortgage security over a particular asset. Then we actually go to our investor base, and then basically our investors share the interest income of that particular investment opportunity.
So just going back to that point, the way that the investors get their yield is we charge a borrower interest, and they share in that interest, and that's the way that they get their return. The best way to actually see the theory about what we do is I'd like to go through an investment opportunity that we recently settled, and that way you can actually see the way our investors see information and what they actually receive. I think is very important. So we had a borrower come to us. She came to us with a need to restructure her finances. She had a very, very complex structure. So the major banks just couldn't see through the structure. They couldn't make sense of it. Now, at Msquared, we love those type of opportunities because we are very versed in complex structures. So the first thing was we had a borrower that had a need for finance, and then we went through our credit process. So the first part of the credit process is in the unlikely event that the borrower can't meet their obligation. Well, what do we fall back on? Paul, we fall back on the collateral security. Very important part when you're risk assessing. So in this particular instance, we had a block of units, 14 units to be exact, in a commercial suite in the heart of Sydney, Balmain. The property was magnificent. It had harbour views. The whole block was 100% leased, and we took a first registered mortgage over that security. So the first part of collateral, Msquared Capital were very, very comfortable over.
It was a tick.
It was a tick.
So the other one is character, for example, and character is one of those things that people don't look at very carefully. We look at and look very carefully in the past performance of that particular borrower. So when they had a previous mortgages, we want to make sure that they met their obligations, because it's an indication in relation to how well they will perform on our proposed mortgage.
Yeah, well, what's the old saying? Leopards don't change their spots. So what we're saying in character, if they've defaulted before, we're not saying they will default 100% again, but they're more likely to have the same character. So it's very important to cut that. So in this instance, the borrower had returned money before. They were known to Msquared, so they passed the character test for us. The next part of the assessment process is we look at the capacity, the cash flow. Our investors get paid monthly, so it's imperative that the borrowers can meet their monthly obligations when they become due. In this instance, we had a borrower that had great asset position. They had over $11 million worth of assets outside of the security property. The property was fully leased, and she had cash reserves to meet the obligations. So from a capacity and a cash flow perspective, we're very comfortable that they could meet their obligations. So we're very happy with that part as well. So another tick on that part.
And competency is really simple. You want to make sure that you're lending to borrowers who are actually competent in relation to the field that they're actually generating income on. In this particular case, this particular borrower had a very good track record in relation to being a professional investor, and they've done very well over their 20 years that they've been in this profession.
Yeah, but on that point, I think track record is always very important, isn't it?
Yeah, absolutely.
Yeah.
So look, the one thing that really is so interesting in relation to our process, and we see it all the time, to be able to assess the risk of a particular mortgage, you need to be looking at all of these elements. And we see as a common mistake, for example, that someone focuses on your one positive element and not the other ones. For example, the character is very good. He's such a good guy, let's lend him some money. But if there's no security, what's his capacity? Those questions have to be asked. So the combination of these elements is so critical to assess risk. And our process is that we want to make sure that our investors have the capacity and the ability to be able to see this information, due diligence that we have. Very, very critical.
Very critical. So we're here about investors. What was the benefit? What did our investors actually get out of participating in that investment?
Well, let's look at this particular one. Our investors received 7.4% net return. The term of the facility was for 18 months. So we have investors from all walk of life and have different requirements. However, we had 50 investors who invested in this particular transaction. Now, you could be Lachlan, who's a farmer in South Australia, or Helen and Trevor, who's in regional New South Wales, saving towards a retirement. Or you have Leon, for example, in Brisbane, for example, a self-funded retiree. So what was in common with all of these investors? What they really, really want is to have a stable, reliable monthly income that is secured against a quality asset that is proven to stand volatility over time as well. So they can sleep at night and not worry about their investment.
So you wrote a great article that our investors loved recently, and I think it's really pertinent to talk about that now. And we are very passionate, and we see things in the industry, and we want to cover off what questions anybody should ask when they are investing in the alternative class, or for any investment in that matter, right?
So I wrote a recent article. It was very popular with our investors, and especially this particular section. What I had in mind when I was writing this is that alternative investment area is growing significantly at the moment. And we know that within that alternative investment space, there are so many different options. There's secured, unsecured. You can, there's going to be products where you can invest in car loans, all kinds of different things. People could be manufacturing product because they need to park their money and get that yield somewhere. So when I was thinking through this, and for example, I saw an ad just the other day as well, very glossy magazine, fixed income over 10%. So what does that actually mean? When you actually look at the detail, what questions do you need to ask yourself to make sure that you actually understand the investment, don't lose your money? So these are the type of things that you want to...
Let's break it down, Paul. Let's break it down. Do
I really understand how the investment works and structure? Okay, it's not just conceptually, but do you really understand how it works? So for example, this one that I was looking at, when you're actually reading through it, there's no explanation in relation to how the investment works. What is it? Is it you're getting fixed income against what's the security? What's the proposal? What's the business case? There's nothing, no detail.
Warren Buffett told us, didn't he? If you don't understand what you're investing in, don't invest. I think we've got a very, very similar mindset on that.
Absolutely. So I think that is the first question that you want to ask. The second one is, does the business case make sense? So will it pass the pub test?
Yeah. So look, what is the pub test? I mean, the pub test, we haven't been to pubs that much for a while, unfortunately. But will you be laughed out of the room if you ask or tell your friend, I'm going to invest in this? Yeah. It doesn't seem reasonable that you're going to get that, for lending into this particular investment, you're going to get that return. So does it pass the pub test?
Because with the advertising is, you're being promised something that you'll get. But no one's asking is, how will that business be able to make the money to be able to afford to give it? And that is what that's a core of it. That's a critical point. And the third one, I know that we're so passionate about this and we keep coming down to it, is that if you've been sold on a story and a structure and something goes wrong, what is the security? What's the recourse?
Yeah, and look, there are different types of security. So even with us, we have said countless numbers of times, we only do registered first mortgages on property, but there's certain properties we will take as security, and there's certain that we don't. For example, we don't lend against specialised security. We don't want to be lending against a pub, a club or a bowling alley or a big block of land in regional Queensland, for argument's sake. We love regional Queensland.
We love regional, but if you really think about it, if you are stuck with that as a security and the market is very thin, you might take years to recover the money for your investors. It's not a situation that we want to be in. Look,
it's not even how long it takes. If you have to fire sell an asset that is specialised, you are at more risk that the value goes down. And that is why, be careful of the security, be careful of what the underlying security is.
Yeah, absolutely. So look, the fourth one, is it easy for you to receive information from the fund manager?
Look, I think that would be a no-brainer, right? If you ask a fund manager something and they're not willing to provide it to you, then there's a problem. So for us, for argument's sake, we've got investors that want to see information differently. Some of them want to call Paul or myself and talk through a particular investment. We're happy to do that. Some of our investors want to have a one-page executive summary, and some of them are so detailed, they want to see every single piece that we've got and could read 100 pages. So if they're not going to anyone's not going to give you the information, red flags. Red flags.
It's our philosophy that if our investors are not asking enough questions, we want to be telling them.
Yeah.
We want to be explaining to them what the benefits of this particular transaction are. We want to be explaining all the 5 Cs.
Yeah.
I think it's a very important conversation.
I do too.
Mm.
Now, the last point.
Yep.
The last point. You say it, mate.
All right. Okay. Will my investment withstand another economic shock?
Look, we're living through it now. COVID's been an economic shock that a lot of investments haven't been able to deal with. In our particular instance, for our investors to lose money, the property prices would have to have dropped by 35%. So we only lend up to 65% generally against the security property. So would the properties drop 35%? That's a question you have to ask if you're going to lose money, really.
Yeah, absolutely.
So we're getting shooed off by Mr. Switzer in the background here. He's waving us off. Now, if you'd like to join the Msquared family, we'd love to have you on board. Please go to the website vip.msqcapital.com.au/Switzer. It will come up on your screen. We would love to speak to you about the investments. We've got some wonderful opportunities to tell you about, but we just don't have time to tell you about it now. So put your details there, go on our database, receive our information, ask for a call from Paul and myself. We'd love to speak to you. Thank you very much.
Thank you.